You're listening to Money FM 89.3, and it's now time for Under the Radar with me, Chua Tian Tian. Now, have you ever wondered where the meat we eat come from or came from? And that's exactly what we are going to find out today. Now, headquartered in Singapore, our guest Japfa specializes in producing protein staples and packaged food that feeds millions of people. Now, put simply, the company produces animal feed such as poultry feed, cattle feed, and aquaculture feed, and it breeds animals such as chicken, pigs, fish, and cows, fatten them before processing and distributing them. Now, Japfa has a workforce of over 38,000 people across an integrated network of modern farming, processing, and distribution facilities in Indonesia, Vietnam, India, Myanmar, and Bangladesh. But what are the benefits of being vertically integrated, and which are the key markets for Japfa? Also, how is the company diversifying its revenue streams in a post-pandemic world, and how does Japfa position itself in a high inflationary environment where consumers are squeezed by price increases? Well, for more, let's speak to Tan Yong Nang, CEO of Japfa. Yong Nang, welcome to the show.
Thank you for having me.
Great to have you on board with us. And we've briefly touched on this, Yongnam, about how Japfa is a meat provider involved in every step of the meat production process, from farm to supermarket at least, right? So tell us more about your value proposition and business model then.
Yeah, it's very interesting. You opened your conversation by saying that, do we know where the meat come from? Interestingly, for people who have never been to the farm, right? Especially some of the younger generation, it's really funny. There was once I asked a few younger generations to ask them, have you been to a farm? Have you ever seen pigs? Have you ever seen live chicken? And the answer was, well, I thought chicken come from a table, It's sort of, they only seen the sort of processed chicken. Now, our business proposition is quite different, as you rightly pointed out. Actually, we come all the way. You can say that it's a cater actually, you can say it's a farm to the table. We are very vertically integrated. We process all the way from the animal feed. And from animal feed, I think our strength, as I say, is a modern farms. We are in the modern farming, which grow up, and our output is mainly livestock. And after that, actually, we further process it into either sort of carcass or kata meat, and in terms also further process into sausages, chicken wings, and package into food that you see in the supermarket. So in the supermarket, you can see a live product, a carcass product, which is a kata product, or a food product. So in that sense, we are quite vertically integrated.
Okay, and I understand Japfa has a workforce of over 38,000 people, mostly spread across your network of facilities in ASEAN, but take us through your current footprint across the region.
Yeah, our biggest market is still Indonesia. I think we started in Indonesia about 52 years ago. That's how we started. So we started there in the mainly, I'll say initially in the poultry product. Then over time, we are diversified into beef, into aquaculture, and other sort of animal protein. For instance, like we are also in the milk production. At the same time, we also expanded geographically using what we learned in Indonesia. We diversify ourselves into Vietnam and India, and largely over the market in the poultry product. But over time, actually, we also add on the new protein, which is a swine product. And today, we are one of the leading players in Vietnam, also in swine products. So this is our general footprint. And prior to end of last year, in fact, we do have a fairly substantial operation in China in production of raw milk. We are one of the biggest player in China and one of the pioneer there. And through a corporate action that we conducted last year, we actually split it up and spin it off directly to our shareholders. So our China business today is owned directly by the shareholders, and it is also listed in Hong Kong. So today, you say specifically talking about Jaffa, our focus area of footprint is in Southeast Asia and South Asia itself. I think easily we are talking about 500 million people in Southeast Asia. We are talking about a billion people in more than a billion people in South China. Then that is today Jaffa's footprint. As to our sister company, Australia, obviously their footprint will be a lot more focusing in the China market.
You were talking about some numbers, 5 million and more. Those were the number of customers that you sort of serve, right?
No, I'm saying that the potential market is 500 million people. Now, if you look at the most market in which we operate, right, actually, we do have a substantial market share in the farming side. A lot of area, actually, we do have a market share of 20 to 30%, which actually counts ourselves as one of the top two or three players. And
Right.
that is really our strategy. Our strategy is actually, providing affordable protein sources to the masses. So for us, it's actually the market must be big enough, and we must achieve one of the leading market positioning in order to service the mass market and to create to achieve a leading market position as well.
And let's talk about industry positioning, Yong Nang. How does Japfa position itself against the other major players in the industry? I was looking at some names. Would you consider farms or meat processors, the likes of Saha Farms or Thai German Meat Product Company, Chop Hop Chong Food Industries, would you consider them to be your competitors then?
I think we have competitors in many sort of the different parts of our value chain. I would say that in terms of upstream farming side, right? Yeah, I think we are one of the biggest player in as I say Southeast Asia and South China and South Asia. So those are there are quite a few major players in there. Who are, for instance, like CP, Jalan Popan. We are talking about people like Leong Hap and things like that. So I think in different value chain, for us in terms of processing, we are also competing fiercely in the food market under the brand name of So Good and So Nice in Indonesia. So we have all sorts of different competitors, different area, but suffice to say that everywhere we go to, right, we try to achieve our leading positioning market share. Now, but actually, another area I want to talk about is other than the modern farms, right? We are also competing with a lot of traditional farms. In a lot of business, for instance, like the swine market in Vietnam, it is still not that well structured. It's still not that well organized. We do have a lot of competitors still in the traditional market, and so we also compete against them in that area. I think that the big difference of basis of competition with a lot of players, I would say that is that first of all, is through economies of scale. As I said, we have a fairly substantial market footprint that actually afford us a fairly good economies of scale. Now, at the same time, actually, we also focus a lot of our technical know-how. Because of the years of experience, we do acquire a lot of technical know-hows. And this is where we can compete very effectively, not only against the other industrialized players, but actually far more importantly, we can compete with the smaller farmers.
Okay, you talked about competition with the smaller farmers and modern farmers. So I'm just going to put these two questions together. First of all, is how would you define a modern farmer versus a traditional farmer? And the second thing is what are the benefits of being vertically integrated when it comes to cost savings and, as you mentioned, economies of scale as well?
I think it is that for a more modern farming and such as ourselves, right? There are two things that separate us from traditional farmer. Clearly, I think the way we approach at the farm level, we utilizes a lot of different machinery system. For instance, like traditional chicken houses, chicken could be an open house based on they are subject to the environment. Whereas for modern farming, we tend to use a closed house whereby the whole place is what called temperature control. The feeding system could be more automatic so that the chicken or the pigs, would have a better environment and more controlled environment. So that is slight differentiation there. But actually even more important is actually, for most modern farmers like ourselves, right? The business is in farming business is quite well segmented. You have the breeding side, then you have the growing out side. Most farmers, they wouldn't have the economies of scale to build the breeding side of business. So, for instance, just give you an example, right? I think if you have the breeding side on the pig side, for instance, you need to start with grandparent stocks. The hierarchy is very clear, and then that will give you the parent stock, and eventually the final stock that is then used that we feed it and grow up in the commercial farming. So a lot of traditional farmers, smaller farmers, they tend to buy the piglets from bigger industry player like ourselves, and they will commercialize it. They will basic, we call it commercial operation. They will grow it up. So as an industrial farmer, modern farmer, you tend to participate also on the breeding side. And the breeding side, that requires a lot more technical know-how and economies of scale. I was alluding to just now, for instance, if you start off with one great parent stock, that's even with 600 great grandparent stocks, right? You may eventually end up with 4 or 5 million pigs per year. That's a huge number. So just give you a scale to give you some understanding that in order to have the upside, the upstream part of the breeding operation, you really need to have economies of scale to support only 600 great grandparent stock. Similarly, I think this business, the biggest cost is actually raw materials. And as we become bigger and bigger, I think you do have better purchasing power. And as a group, we group together our purchasing of our raw materials. And, most of the raw materials, sometimes you import by bulk. For instance, you can import by Panamax. And if you're a smaller player, they won't have the ability to do so. And therefore, I think the cost difference will be quite different.
And let's take a look at the wider business environment. Yong Nang, countries in Asia and ASEAN in particular, they are going through so-called meatification phase, where the countries and people are demanding more meat. According to Report Linker, which is a market research firm, the APEC edible meat market projected to register a CAGR of around 1.95% between 2022 and 2028. Demand mostly coming in from China. What's the situation like for you across the different markets? Which kinds of meat are in demand there?
Well, actually, if you look at Southeast Asia market, right, I think the per capita consumption of meat is still fairly low. If you look at per capita consumption of chicken in Indonesia, right, we are talking about maybe about 10, 11 kilo of chicken meat per person per year. And that is really small. If you compare to a similar market in Malaysia, right, you are talking about 40 kilo. So actually, there's still a long way to grow. Similarly, if you look at Vietnam, like the per capita consumption of pork is still way below Thailand and still way below China. So I would say the growth is everywhere. It's not just China. I think China growth is good, it's very robust, and I also coupled by China have a much larger population. But putting that aside, if you look at the area in which we are operating in, you will find that actually the per capita income is still very low and still a long way to go. Typically, if you look at the consumption curve, right, when the per capita income, GDP per capita is below 5,000 US per person per year, the milk like that, and you start to see that the growth in consumption actually taper off. In fact, in some area in the Western country, developed country, you are starting to see it's coming off a bit. So actually, between the 5,000 to 30,000, this is a tremendous growth curve, and we are really lucky, and then that we are focusing in this part of area whereby number one, consumption is low. The GDP per capita is at a stage whereby it's about to take off, and there's still a lot of populations. We are talking about, as I say, right, Southeast Asia, 500 million people, and India, more than 1 billion people that we can focus on. So we're pretty in terms of broader environment, I would say that obviously in the near term there are some headwind, but I think medium to long term we are still in a very good market. I would say that typically, in terms of, we talk about the market potential, while China is obviously much bigger market in terms of population, and the consumption is also fairly high, and the growth rate is still very high. But putting that aside, if you look at Southeast Asia, we are still thinking about fairly massive population. And if you look at the consumption pattern historically, right, a country whereby their per capita income is less than $5,000, you tend to see that you will be at a level whereby the meat consumption would still be fairly low. And because of affordability issue, the consumption doesn't grow that quickly. And on the other extreme, you will look at the country that have a very high income, for instance, like the Western world, right, where the income is very high. You can see that beyond certain point, actually meat consumption reach a saturation area, whereby consumption start to slow down, and in fact sometimes do decline. So it's between the two that whereby you can see a tremendous growth period. I think we are really fortunate in the area in which we participate. We are actually in that sweet spot. So in the near term, maybe you do see some a bit of headwind because of the whole geopolitical and economic issue we are facing today. But if you look at medium long term, I think this is still very much a market whereby the consumption will continue to go up. And we do believe we are given our leading position, we are well positioned to capitalize on those trends.
Hmm. If you're just tuning in, we're now speaking to Tan Yong Nang, Chief Executive Officer at Japfa. And Yong, let's take a look at the supply side of things. We've seen how supply chains were disrupted during the pandemic, and last year Malaysia banned chicken exports to ensure their domestic price stability. How does that influence the way in which you take the company forward? Because I understand you are testing an option to supply fresh chicken to Singapore from Indonesia, and some 23,000 live chickens have been delivered. So tell us more about that.
Yeah, since you're on this, so a bit of marketing. Actually, we do have another shipment coming in as we speak. So tomorrow, the another shipment will still be coming in. So actually, at this stage, right, we are still testing making sure that the supply is smooth and all of the logistics is to be ironed out before we can really sort of supply to Singapore on a consistent basis. And as I alluded to just now, our business is really providing for the masses. And the masses are in most of the other country around Singapore. And Singapore still, at the end of the day, still have a fairly smaller operation, a smaller population. Now, having said that, I think we are in a Singapore company and we are very keen to participate in Singapore's effort in terms of supply or rather food self-sufficiency and food resiliency. That's area that we are very keen to participate. Yeah, I think historically, I think a lot of live chicken actually do come from Malaysia. And because of for ourselves, because our focus is a lot on in Indonesia, for instance, every day we will produce 2 to 3 million chicken for the Indonesian market, and I do believe in whole Singapore consumption is probably 5 million chicken live chicken per week. So for us to participate in Singapore market and to incremental increase of production to supply to Singapore, it is something that we finally got onto it with the opportunity opening up with Singapore government sort of pursuing a diversification strategy. We feel that this is a really good time for us to participate and to be helpful in that aspect.
And let's talk a little bit about Japfa's financial performance, Yongnam. The firm reported a 43 million, I believe it's US dollar loss for Q1 2023, which is a reversal from a 13.5 million profit in Q1 2022. And this, of course, coming on the back of margin compression because you've got higher inflation, meaning higher raw material prices. But inflationary pressures also mean that consumers can't spend as much. So tell us more about that, and also how have the African swine fever weighed on your latest performance too?
Yeah, I think in terms of consumer price sort of pressure, right? Yes, definitely does have impact on ability to consume, but not forgetting that we are staple protein. This is one of the cheapest protein. You talk about chicken and pork. These are one of the cheapest protein that is available, and it is our job to continue to make sure it's affordable. But I think what we're seeing today is a double whammy. On the one hand, the economy, the chicken price, the protein prices is difficult to pass on. At the same time, you can see that the key is actually more the commodity prices has gone up for various factors, whether supply disruption and things like that. I do believe, in our kind of market, there's always a cycle. I think given it's a stable product, we tend to pass on the cost increase, but sometimes given the weak economy, it's a bit harder, so it may take a bit longer time to pass on. And at the same time, I think the on the raw material side, it has its own cycle. Hopefully, I think we are starting to see some softening in commodity prices. And obviously, it's difficult to predict going forward. But given what is going on, hopefully over time, the softening of commodity prices will be will be a really strong headwind for us. As far as the company is concerned, clearly, I think if the demand is a bit reduced, then I think all of us, including ourselves and the major players, we will take our steps by cutting some production. We'll take our step by reducing our capital expenditure. We take steps in recalibrate our growth plan. Nonetheless, not forgetting that what I said just now, in the medium and long term, I think still is a very potentially huge market. And in the short term, clearly we need to adjust our production to cater for that. Now, your question about ASF, ASF is here to stay. Today, there is still no vaccine. China has been fighting that problem for a long time. And that problem has also moved on to Vietnam. I would say this is that we talk about the traditional farm versus the more modern farm. I would say that modern farm will be in a better position given that we control the environment better. We should be in a better position to weather the ASF. So at the end of the day, I would say that there's still no vaccine available. I think the only way to fight it is to have better biosecurity, better control, which I think we believe industrial players and modern farm like ours will be much more well placed than the traditional smaller players.
For the sake of our listeners, ASF refers to African swine fever, yeah? And wrapping up
That's
the
right.
conversation, Yong Nang, cultivated meat has been making the news quite a lot. In fact, if we search meat industry in one of our search engines, the first thing that comes out is cultivated meat. So what bearing will the rise of the cultivated meat industry have on traditional meat producers?
I would say that the mass market is still very much dominant. Well, today it's actually very much dominated by the traditional staple products, staple proteins. But clearly, I think for sort of alternative meat, whether it's a plant-based or cell-based meat, right? I think there will be a positioning over long term. There will be a niche positioning. How big it is really difficult to speculate. I think unlike our industry is very well accepted, the technology is a lot more stable, and consumer preference are very stable. Whereas I think for alternative meat, they do have their. It's a very interesting proposition, but I think they do have their fair share of challenges. For instance, in terms of cost, I'm not sure today the cost is competitive versus our traditional way of growing the animal. In terms of technology, are they fully there? In terms of are they able to replicate all the nutrients and all the ingredients that we may not be aware of, and all the additive they put in, right? That's another issue. So to summary, I don't think it's something we should sort of put it aside. Or I think in the long term it will be a niche or certain market, maybe for some high-end customer who can afford a lot more expensive kind of product may have certain focus, may have certain interest in that kind of area. But I think by and large, I think we will continue to lower costs. We'll continue to do what is necessary, understanding the problem facing or criticism regarding some of our product. I think we do have some issues and challenges on the traditional side, for instance, like environmental, animal health, safety, and things like that. And those are the area I think the industry are always taking steps to try to address them. So I think it's a matter of time, just enough time given. I think those are something that we will try to address as well.
And very quickly before we let you go, Yong Nang, what is the outlook ahead for Japfa's business? What can we expect in the second half of this fiscal year?
Well, it's difficult to forecast, but if I want to sort of put myself out there, right? Even at last year, we always say that in my budget last year, we say that this is a year of two halves. First half, because of momentum coming from last year, it will be challenging, and we have witnessed that it has been challenging. But I think we are starting to see light at the end of the tunnel. I think we are starting to see that our ability to pass on prices seems to be better. We are starting to see some softening in commodity prices. I think those are the two major driving force that will give us lead us into the second half of this year. So I would say I'm hopeful. I'm hopeful on second half, and but please don't quote me because I think notoriously it is really difficult to predict our protein prices. Likewise, it's really difficult to predict commodity prices.
Mm. Thanks a lot, Yong Nang. That was Tan Yong Nang, CEO of Japfa. Thank you very much for joining us on Money FM 89.3.
Money FM 89.3.